Okay, we we will talk about the sideway market and the RSI divergency, and how to identify RSI divergency, how the price and RSI divergence sometimes they give different sign, and we will know when the market is sideways and when the market is trending. That is this video is all about. So let's go on. Now if you look this chart, you see that the moving average, the 15 moving average and the 20 moving average are going horizontal. They frequently were crossing over if you look them. So, and you see the chart, see the price, what you do is go up, you break the chart up upside, it come down, you see break upside. This telling that when you see chart like this, anytime, this is a sideways market. And you understand that inside the market, there is no clear way to trade very well. That is why if you do not have the strategy that can trade sideways, please I advise you, off your screen, go out and do others and find others things to do, because there is no opportunity for you. Now let's go on. You see this one, this is still a sideways market. Sometimes you see the market will break up with very strong momentum candles, and later on you see the market still it break down. It break below moving average, below 20 moving average and 15 moving average. This tell you that the market is sideways. Even though you see there is momentum in the candle, but the market is but the moving averages are frequently crossing over. This is what it's a complete sideways market. So if you want to trade this kind, I advise you, maybe when you look like 1 hour or 4 hour chart, you see this kind moving, go to a lower time frame, like 5 minutes or 1 minute to trade this kind one. But for me, I do not trade sideways market. When I see like this, I just off my chart, I do other things. Let's move on. See this now, market is still sideways. See what's happening. See the moving average, like 20 moving average and 15 moving average are going sideways. You see them now, they are going sideways. The chart is going up, down, up, down, up, down. This tell you that. But when market break down, see, when market break down, you see the moving average market is lower, completely showing that real trending. But when you see the back, see it. When you see this back, the all moving average are going sideways, which is horizontal. This tell you that it's a sideways market. There's no opportunity for you if you have a strategy of trend following. Let's move on. Look this one. The market show that the market is uptrend. Later on, still market break down. Still the price come down to the price still come down to the blow of 50 moving average and 20 moving average. Later on, still go up. He break the moving average still above it. This is telling that this market is a sideways, because it's frequently going up and down. And see the moving average are frequently crossing over both the 20 moving average and 15 moving average. This you see this, will identify it. I know it is a sideways market. Let's go on. See this one. This one tell you that the line is sloping straight forward with the upward momentum. See the momentum of the chart now. See the way the line. See the way the 20 moving average and 50 moving average, the leave space between them. With this interval, the leave between them, this telling you that the market is uptrend, because this one is a clear uptrend, because the moving average are not frequently crossing over. That means they are not just crossing over in a minute or in a seconds, because they move straight line. When you see like this is a strong buy momentum of buyers. By this market, you are just waiting for the price to pull back to the 20 moving average or to the 50 moving average, just to enter at there and just enter your market for buyer to put the market go up. This is a complete uptrend market, because see the moving average, 20 moving average and 50 moving average, they leave interval, they leave field between them, they leave space. This space telling that the buyers have dominated this price. Now let's go on. See this one, clearly downtrend. See what is happening. See the 20 moving average and 15 moving average, the leave space between them. And after the market mitigate or retest on 20 moving average, the market still fall down. And this is where you are entering. This place is where you are entering. It is where you need to enter in the market. This place is where you need to enter your market, because those places is where market retrace on 20 moving average. So this one, you will enter the market and sell your market to the next one. You take your product to the next next demand area, and see the moving average one, they go straight line to the downside. This is a strong one, telling you that the sellers are very strong. They dominated the whole price. And when let's go forward and look at another scenario. Okay, see this one. The market is break up with momentum, with candles. See, almost 1, 2, 3, 4, 5 candles of bullish. It's like, yeah, it's a bullish market, but let us see the red candle, which is bearish one. See, big one was what is coming down, and still see what happened. Another candle is going up. So let me tell you, in a sideways market, you will see the market is going zigzag. That is what the example of zigzag. And still see the moving average are frequently in a minute they will cross over, or in a second they will cross over. In a minute they will cross over up. In a second, you see the price is cross over to downward. This is telling you that the buyers and seller, no one is winning the market. That is why the market is consolidating in the same place, because both sellers, they are strong, both sellers are strong. So by this content, if buyers are strong, sellers are strong, the market cannot go anywhere. That is why you see the market consolidate sideways, because no one is winning. You see it. So this is a consolidation market. When you see like this, even though there is momentum in the candles, but the market is going sideways, or the moving averages are going horizontal, or they are frequently crossing over. Do not trade that market. Remember, we are 1 hour. Okay, let's go to this one. You see this one. I do my analysis as a day trader. I do my analysis in a daily time frame. Sometimes I do it in a 4-hour time frame, but I do not spend more time in daily time frame. You know why? I use daily just to look for the big picture of the market. When I see the big picture, because remember, in a daily time frame, 1 candle mean a day. So when I look the overall trend, if I see the price is above 20, it's above 200 moving average. So I know that the market is uptrend. When I come down to 4-hour time frame, I see the overall market. Now the price is above 200 moving average, 50 moving average. This give me clearly that I'm looking for buying in a 1-hour time frame. Now see this one. We are in 1-hour time frame. See what happened. This rectangle that you see I draw, that I put one arrow touch it, another arrow facing up. So when I draw this line in a 4-hour time frame, I come to lower time frame like 1 hour. I do not just predicate it. I say that if market come to this zone that I draw, rectangle that I draw from 1 hour, I will enter the market and see later on the market now touch it and it's going up. So I enter the market and I take this prop to all the way to here, all the way to up here. See, you see how much you make when you enter from this market. The people that have big account, let me tell you, people that have big account that enter from this arrow that's going down to all the way to here, guy, they will make money. But with small accounts, you can make like this one, $10, $15, $20. It's okay. So, but if you know how to identify your markets from 4 hour or 1 hour and going down to lower time frame, you have a snapper entering. So this is, and see the moving average. See, this red one is a 20 moving average. The black one is a 15 moving average. But see the way they give space between them. What does this tell you? They are telling you that these buyers are strong in the market and the market is bullish. That is why there is no frequently crossing. They never cross. Even the first cross that they cross the one, the market is retracing. You understand? Huh? Okay, because it retraces very deep. That is, you see like small twisting together. But see later on, they open, they leave space between them, telling you that the buyers are strong in the markets. Let's go on. You see this one, as I tell, when you see like this, even though there is a momentum in the candle, guy, do not trade. When the moving average are frequently crossing over in a just matter of seconds, they're crossing over. Don't trade that market. Don't trade, because there is no opportunity. And even though you have the strategies of trading sideways market, I advise you, please go down to the lower time frame. When you analyze in 1 hour or 4 hour chart, go to the 1 minute, 5 minutes and trade this kind of strategies. Okay, this one, when I see like this, I do not trade. I just close do other things, because you need one thing to trade for. What will help you, advise you have other things, like have other YouTube channel, for example, for other your hobby, so that when there is no chance in the market, you will do other things. You understand? Record videos, so it will give you edge to wait for the opportunity, to wait your trading plan to align before you come back to the market. See, the best trader in forex trading sometimes you never trade, because you will wait for your attempt. People are making money by waiting, not by forcing trade. So when you see chart like this, moving away are crossing over frequently, don't force trade, guy. Do other things, find other business, find other things to find other things that you love doing, like writing books, many things you can do now. So you cannot force trade to lose to blow your account. Okay, let's move. You see this one. I analyze this chart in a it's a GBP USD. Analyze it in 4 hours. So I draw this. I see the market in a 4 hour. He break the structure to downside, and I see the price is below 50 moving average annual and 200 moving average in a 4 hour. So I'll go down to a 1 hour. See, this is a 1 hour. In 1 hour, I'll only use 15 moving average, and 20 moving average in 1 hour. So now see the price. As I draw, see this price. The price come back. It mitigate in this rectangle that I drew in a 4 hour. So after the price mitigate, see the candlestick, the story that I tell you. You remember the candlestick I send you message. If you understand them, see they are getting smaller, telling me that what they display that I mitigate now is a strong resistance. Because remember, I drew this one in a 4 hour. I remember 1 hour. 1 hour is down, is below 4 hour. So this chart on 1 hour must respect 4 hour time frame. And you see it, the chart is going down. The market is coming down. This tell you I enter the market. See this arrow that you see, I enter the market, and the market you go all the way to this place. To this place you see it. You go down to all the way to this demand zone of 1 hour. So this is how you analyze your market. Let's go to another. You see it. You see the way I identify in 4 hour, because it's the same currency, GBP USD. It's a 4 hour now. See it. Okay. You see the market is below 200 annual and 50 moving average. See the way I draw it. When I draw this one in a 4 hour, I go to 1 hour. Yes, you see it. That is a clear the way I do my analysis. So my strategies that work for me, you will test. If it work for you, you will use it. But let me tell you, in Forex trading, do not take advice from anybody. But you need to learn from others people. Yes, if my strategies work for you, it is okay. It is mean that our thinking or our belief is the same in the market. That is all. But that's why do not just watch others guru that were telling you that this strategies it will help you. I'll sell this one for you. No. But you test if it work for you. Yes, it's okay. But don't take advice. Don't take signal for anybody. Learn from the chart. All these things that I'm telling you right now, I learn from the chart too. Even though I hear the news getting the ideas by watching other people video, different people, but I gather the information. I know which one is working, which one is not working. This one, that is one what work for me. Yes. You see, this one that I tell you, you see the moving average are going horizontal, even though they have space between them. But you see what the chart is doing. The chart is going sideways. What do this one tell you? This one tell you the market is sideways market. Yes, and a sideways market. Remember, I tell you do not trade, because you lose money if you are a beginner. I'm telling you, you cannot make money for this one. Because when you think maybe you look like this, you go to the lower time frame. You think, oh yeah, the market is going up. You enter, you see the market come down again. That's what I'm telling you. If you do not have experience in the market, do not trade sideways market. That is my advice. Okay, let's go again. Come here and look this one. This is the AUD/USD or Australian. That means Australian dollar and a USD dollar. You are trading Australian currency and American currency. Now see in 1 hour. See chart. Market is a complete downtrend. See the way 50 moving average and 20 moving average. Guy, they leave space. They go straight downward. But see what is happening. See the candlestick down. The candlestick are getting smaller. What is this one? This which sign? Which story do they tell you? Those candlesticks, they are telling you that seller now. The thing is too down. The market is too low. So the price is too low. Let me give this. For example, if you go market, you are selling bags of beans. When the price is go 20, is first the time you bring the bags and they are selling the bag. 100,000, and when you see the price, many people already bring the bags. The price drop, and when the price drop, can you still sell your bags? No, you must store them. That is what is happening here. You see, but do not want to sell again because the price is too cheap. No one want to sell now. Okay, you see that is why the candlestick is consolidating, and see RSI chart is selling the lower low. The candlestick, even though it's printing smaller, but see he's telling you the market is going sideways. Even the move average still market is going sideways. But look what his chart RSI is telling you. RSI is telling you that the market is moving. The market is making higher. It's making higher low. The market is going up. And see later on, see the chart, see the big candlestick of buyer. So between the price action and the RSI, who tell you the truth? RSI tell you the truth, because the RSI give you the examples, you already start telling that this small candlestick that you see on the chart, the market is trying to go up. If you have ear, make you hear very well. It's telling the market is something that I compare price action, and I used to compare price action and RSI just to hear the leakage, because RSI always tell me the leakage of what price want to do. Because see, RSI tell me that market is want to go high, but chart is telling me and movie average telling me that the market is down trend. So this is they call RSI divergence. If you understand RSI divergence, guy, you will catch up many opportunities to trade Forex. And now see the way market break up with the bullish market. Maybe this one, it will be, maybe they are waiting news. You understand? Because when there is news, they want to come up. Maybe there is news on Australian dollar, or there is news on USD. So people that are waiting, people that are closing their setup because they are waiting the news. Maybe it will buy news. So people they are just closing their trades. So they are waiting what will happen. So, and see it, let our market break up. Let's go again. You see this divergence. Chart is making what? Chart is making higher highs. See the bottom, see the top now. It's making a higher high. See the arrow is going up. But see RSI what is telling you. The RSI is telling you that the market is making lower high. Because see the arrow of what RSI is looking downward. Willing the price arrow is looking upward. And see later on, see what happened on the chart now. The later on, the chart break below 20 moving average and 50 moving average. This tell you. So between chart and RSI, who tell you the leakage that the price is going to drop? Does the chart tell you and moving average? No. Who tell you? RSI tell you that the market, the way you are seeing it, look me, the market will go down. It will go down. And see really, the real chart really break up. It break the moving average and market continue moving on below of 20 moving average and 50 moving average. Guys, that's what I'm telling you. If you understand the way you read RSI and understand the signal that is called divergence, that means the market will say different thing. RSI will say different thing. But you need to consider what RSI is saying. RSI is always telling the truth. That is the secret that I discovered, and you see it's working. So let's go again. See it now. See this one now. Let us see this RSI divergence now. See the chart. The chart is making equal highs. That's what. This one is a equal highs in a double top, because it's making equal highs in double. See the arrow that I drew. The arrow goes horizontal. Yes, and see what RSI is telling you that the market is making lower high. See the arrow is facing downward. And see chart what happening. Later on the chart break 50 moving average and 20 moving average to the downside. You see, that is why RSI divergence, it have a more current, more bigger current signals. But I do not tell you that RSI does not follow. Sometimes it will follow, because even no strategies in forex trading that will win you every day. Let me tell you, they say that in anything about investment and business and finance, they say that the people who win are people who win from 6 out of 10, or sometimes 4 out of 10, because you cannot win all of 10, no matter how. So you will win even though you win 4 out of 10, guy. But if maybe you are risking $1 to $2, $1 to $3, let me tell you that by long term to come, guy, you will still make money for trading, but you cannot win all your trade. But I'm just telling you the strategy that I'm using is working for me. Let's go on. See this one. I do this analysis. This is a Euro USD. The Euro USD is the most currency that I traded on in forex trading. because it's a euro and USD. It's the biggest one. Is the developed countries that they have a very bullish economies in their countries. Yes, see the way I draw it. I mark this one on 4 hour. When I see the 4 hour, it break the structure to downtrend, to downward. So I mark it. I come down to 1 hour, and I see the RSI. I see this arrow. So as I see this, I just draw the arrow in a 4 hour. I draw it to another one to downward. So I come down to a low time frame, which is 1 hour, and I wait. The market really start dropping, and I see the moving average, see 50 and 20 moving average. See the way the market is below them, and see the market is collapsing. Market is coming down. Markets will really go down, and I enter this market from there, and I take my profit here. I'll see this one. See RSI divergence here again. You see, this one is still a euro USD. So the market is making lower low. See the arrow. See the black arrow now. The black arrow is showing that the market is going down. But later on, see RSI. RSI is showing that the market is going up. You see it. When this signal that RSI divergence is telling you that the market is likely to go up, let's how. But the chart is telling the market is likely to still go down. But one thing that always, even though the chart cannot tell you what exactly the price will do, but I need you just to read the candlesticks. The candlesticks are getting smaller. They're telling you that the sellers are losing momentum, and when sellers are losing momentum, that the market is on the demand, and the buyers will step in the market. And see later on the price break. It break out on moving average to above the moving average, and you see it. So between price and the chart and RSI, who tell you the truth? What will happen? RSI tell you the truth, because RSI tell you the market is making high. Only the chart tell you that the market is still going down, and this is why RSI divergence. If you understand it, you get more opportunity. So let's go. You see this one. I do this analysis on 4 hour. I see the price is above 200 moving average and 50 moving average. This black is a 50 moving average, and this red is 200 moving average. So and I drew the break of structure on 4 hour. So when I draw it, I just draw this line, these arrows. I draw one facing down, one facing up, because this means that if market touch this thing and it do not break below, if you touch this thing and it do not break below, when you touch it and go up like this, so that I'll enter the market, I really see the market is coming down, and that time the market really come down and still go up. So I enter the trade. I drive the market to up. This is how we trade it. You see, this is a lower time frame. That means 1 hour. So you see, I go 1 hour. The way I draw it, see the market. The market is really coming down to this 4 hour. The 4 hour black zone, this one that I drew, you see it here. So I'm predicting that if market touch this one and starting going up, I will enter the market and see something. See RSI, and I'm telling you, when RSI, sometimes when you see RSI, if market is uptrend in a 4 hour and you see RSI is telling you that the market is what? The market is between 30 and 40, or above 40, or below 30. This is telling you that the market later on price will go up. And even when you see a 4 hour is downtrend, and when you see RSI, sometimes is above 70, is between 70 and 60. Let me tell you that the market later on will fall, will not drop, because remember in a uptrend market in a 4 hour, when you see the markets fall in a 30 or 40, this telling you that is the above soul of uptrend, so the market will go up. And when the market is downtrend in a 4 hour, so he's overbought, you will see the price overbought in lower time frame. You will see the price it will be between 60 or 70. That one is overbought. So just telling you the market later on it will collapse down to respect the higher time frame. So this is how I used to trade my trade. I use 200 moving average and 50 moving average on 4 hour time frame. On 4 hour time frame and daily. And I use 20 moving average and 50 moving average on 1 hour and 30 minutes and 15 minutes. So if you get value from this video, I'm telling you just what you do to me, follow me, share this video to other people so that they can see it more, and follow me on Facebook. I usually post my videos on Facebook. Sometimes I see why I'm trying to open my YouTube channel, but follow me on Facebook. All the videos that I'm going to do, I'm dropping on in the Facebook. So learn more. What I will tell you, about all those YouTube channels that are showing that they are success, they are not really giving you education. They are giving you entertainment, and you do not want entertainment as a beginner. You need a knowledge that will really teach you what the market is doing. Yes, they are showing you cars, they are showing you money they are making. This one, Forex trading is not a place that you just is just to make money. No. It's a place where to do the hard work. You need a knowledge first. You don't need to show to be those people to be showing you their houses, to be showing their cars, to be showing their money, to be showing what they are using money to do. No. What the video that's for educating you, telling you what they really Forex trading is. So I have many videos that I'll teach you many things. If you want to listen to me, get the notification of the video that I'm planning. So follow me on Facebook. All those you'll be getting new one reel that are uploading on Facebook reel. So be ready for that. Thank you more, and remember, more love to you, both from your families and friends, and me too. Thank you.